The market update, it's Saturday, August 9th. So I had a lot of action this past week with earnings, in terms of stocks that we were holding. And, um, this is the 2-year chart. So we'll start with the S&P as we always do. So you can see this was the channel I've been talking about. Had my lower trend line here drawn. Came down the April 7th low there. And we've, gained about 30% since that low, 32%, I think. It's the close on yesterday. So, if this was, and again, I'll have to adjust this top line now a little bit because we clearly have our second point here. So as I said, I take the lower trend line, replicate that on the top in this instance. You could reverse that in the case where you've got multiple points on the top and you draw your channel with the same, angle on the bottom. But you can see now we clearly have a second point here with the channel. So, on the top of this upper trend line here. So, if this was an extended bull market that we were in for a couple years, I'd definitely be, going into a lot of cash at this point, just because we're hugging this upper trend line. But we're in the beginning of a bull market that just started here in April. So, as I've been saying, average bull market is like 3 years, 4 years, and the first 12 to 18 months is when you really see the big gains, and we're seeing that now with the stocks. So, I'm pretty heavily invested. I've been selling a little bit on some of the stuff that has been going exponential. When you start seeing things just gapping up every day like AMD was, I took some off the table there the last couple of weeks. I'm glad I did. We'll get into that stock, but which had a nice pullback, which gave an opportunity to get in. But again, I suspect we're going to be in the upper quadrant here of this channel for a while. We start seeing some pullbacks because we're hitting this upper trend line. I would suspect that the 50-day will show a lot of support, the 50-day moving average, which is this blue line. And then we've got the 200-day, which is this gray line, the 150, which is just above that magenta. And then, if we came down to the midpoint here, you see the Fibonacci. This is the purple measurements I have here. But, at the 50% Fibonacci now, you're right about the middle of this channel. I would say that's probably as low as we would go, which would cover this gap back in May, this gap up. But, we'll see what happens. I don't think we're going to have that much of a extended pullback, but you never know. You just got to play it by ear. If we drop below the 50, then, you got to reassess things. But for now, as far as all the stocks I own and the index stuff, I'm just riding this thing and hoping this keeps hugging this. And, at some point then you have to assess if we start seeing multiple day, pullbacks on heavy volume. I was surprised to see the S&P does have 5 distribution days according to IBD. Just saw that yesterday. So, there was some distribution up here, which, if you start seeing that, you got to be careful. So there could be a little bit more of an extended pullback. But again, like I said, if this was an extended bull market, definitely I'd be in mostly cash. We're a majority of cash right now, but the fact that we're in a new bull market gives me confidence that we should continue to see very few pullbacks over the course of the next year, and they should be fairly shallow. I'd be surprised if we saw a double-digit correction anytime soon. And the stochastic here, we actually did get below 70 down here. So there's the slow stochastic, which I like to look at, but we've actually finally came down, and it's been since April here that we got below anything here substantial in terms of the momentum. So this was an opportunity to pick up some ETF shares of the S&P and Nasdaq, and the Nasdaq hit an all-time high yesterday intraday. So that's continuing to do well. Let's do the Nasdaq here quick. This is the 2-year on the Nasdaq. So you can see here we're making all-time highs again. So again, just a really, really strong move. And again, S&P's up like 30% since the April 7th low. So that is quite a move, and you can't expect that to keep going on forever. So it's always good to sell a little bit into strength and have a little bit of dry powder on hand, in the event that there is a more substantial, pullback in the future. All right, so let's get into the stocks then. PLTR is like my top holding. Been talking about that for months. Had great earnings. This thing closed at went as high as 187.99, closed at 186.96 yesterday. So just incredible stock. And they're getting government contracts for the work that they're doing, a lot of AI stuff. And I think, again, this thing does look extended. If we look at the 1 year chart, really moving above the 10-day here, which is this line, and then the 20-day. And you got these gaps, but that's an earnings gap. Those earnings gaps typically don't get filled. Most gaps get filled, but earnings gaps don't usually, if they're strong, and they had really strong earnings. So, I suspect this thing is gonna continue to ride above the 10 and 20. But it doesn't mean you can't take a little bit off the table. Certainly, as it continues to go like this, there'll be pullbacks to at least the 10 and 20 at some point. So, certainly this thing is extended though. But again, we're in the beginning stages of a bull market, so you try to ride these out as long as you can. 5 or 6 quarters of good earnings, is typical, and this thing can keep on going longer term. You can see the stochastic here staying above 70, so really, really strong momentum. And certainly, if it were to get down here in the below 20 range, like it did, that was around the beginning of July. That's an opportunity when you get closer to 50-day like this. That was an opportunity to pick up more shares. Okay, so that one's just doing fantastic. CellH, we had really good earnings report on CellH. I've been talking about this one for months. So this is my bottom trend line channel here, and you can see we gapped up. Thursday, that was a huge gap up on the earnings. So outstanding earnings. Again, this is Celsius, the energy drink. So again, had an opportunity here before earnings to pick some shares up. It actually got down to 41.31 of the low Wednesday, and then Thursday it popped. So really nice 20% plus move on this one just in a day. So, but again, to me, longer term, if we look at this, as I was mentioning this to my niece Grace, this could possibly be a cup with handle that's forming here. So you got your cup formation that's forming. If it gets back up to the former highs, this was back in I guess May of last year, we got up to around $100. You could see probably at that point you'd have a sell-off, and then you may form a handle there. So this is typical IBD chart pattern, their favorite one. You form a cup, and then you have a little sell-off with the handle, and then it takes off again. So that's what could be happening here. Very possible with a strong stock like this. You kind of try to look for those chart patterns and see how they play out. I've talked to some of the guys at work about gold. Right, that was like if I do the max on gold. This is a terrific example of a longer term cup with handle chart pattern that just broke out. So if you go all the way back here to like 2000s here, this is GLD, it's the gold ETF, but we had this huge run up, which is typical of the cup with handle pattern. You get a huge run up first, then you form your base, which is the cup here, and then when you get up to former highs, like GLD did, right, this goes all the way back to 2011, and we got up there in 2020. So like a 9-year cup formed on this thing. So if you were owning gold over this period of time, you didn't really, if you're buying at the bottom of the cup, that's great. But, if you were buying here back in 2011, you really just got back to break even. That's why, I think the chart patterns are important, and there is some timing to this. It's not just, buy and hold. If you're doing a buy and hold, you could have instances like this, even Microsoft. Microsoft, great example of a chart. I got one guy at work who's just sitting on this thing for decades, and he loves it. But if you do longer term here, you could see with Microsoft from 2000, all the way to 2015 here. You didn't do anything. It was basically a huge run up, but then for a good 5 years you're flat. So if you bought at the peaks here, you're basically losing money or breaking even. And then all of a sudden, 2015, you take off and you have another one of these huge runs, and this thing has just been on a tear. But overall, yeah, Microsoft's a great stock, but even a good stock, if you buy it at the wrong time, it's not a good investment. So getting back to GLD, great cup with handle pattern here. We had the handle form at the top here around 194, I guess that was in August of 2020. And this is where I was buying it. Talking to guys at work about this, I was buying this handle, and then what got me was this. It was like a double handle, or almost a triple handle that form here. This thing was consolidating for a long time, I was expecting this thing to break out here, and so I gave up a lot of the GLD that I had in my portfolio because it just wasn't doing anything. And then we had this dip below this former low, and that stopped me out. And I was buying a little bit in here, but as soon as we took off here, I missed this. I mean, this was just incredible here. Anybody who has gold, you could just see the run that this has been on, since like March of last year. I mean, it's just been on a tear. And, this is a monthly chart here, but you can just see it's way above the monthly, 10 period moving average and the 20 period moving average. This is the 50 period moving average down here, this blue line. So like this thing is just absolutely extended, but really, really good move on gold. But this, I want to mention, this is like your typical, cup with handle pattern. It breaks out, and IBD would say that, this is when you buy it on the breakout. So, that's the timing part of their investment strategy. So getting back to SELH, I think, if you look at this longer term, I think it's still a good investment. It's like, even though it was up 20% something this week, I think this thing can get to 100 and test the former highs. And at that point, then I would definitely be selling because at that point I'd be looking for a pullback. If you break it, sometimes you have a base that just breaks, there's no handle, it goes, and I'd buy it back. Just that simple. But I think this will continue to be a good one. Let's get back to some of the other stocks. Apple, that one's been doing great. I bought that around $200 and had a really nice move this week with some of the tariff news from Trump and the Apple CEO Tim Cook. So I think that one's going to continue to move. That's great. Finally getting some good movement there. Amazon had that around 200 as well. It's up around 222, so good move on Amazon. I think this one will continue to do well. It did break the 50 here, which is a little concerning, but I was buying around 200 back here actually. So we did have a big drop, but it's getting back. So I like Amazon. AMD, I mentioned that one early on. So this, I think this is just a great stock, in terms of the semiconductors. So typical, again, just like SELH, we had the big move down, right? And then, in April, we've just been going straight up. So almost like a V-shaped recovery here. So did have on earnings, my earnings set here, I should have earning events. Yeah, it's not showing up yet. Oh, there it is. Yeah, here we go. So we had earnings on the 5th, big drop, and that was an opportunity. I actually did buy here. I picked up some more shares. So I was selling, with these parabolic moves here. I mean, look at this 1, 2, 3, 4, like 5 days. This is unsustained. So even going into earnings, I was like, this is a little bit too much when you got that many gaps. So I did take about half my position off here. I think it was, and then I started filling that again here when we had the drop. So I think this is a good one. If you get a pullback, I mean, anything, especially if we get down close to the 50-day and start filling these gaps, I think that would be a great buying. But it may not give you that opportunity. This is a really strong stock. But I like that one. SMCI pullback there as well. So that gives you an opportunity here. You see earnings came out and we dropped. So we're at the 150. We broke the 50-day. But I think there should be strong support here. If we get close to like 39, 40 bucks, this should be strong support. So I did buy on the drop here. And I think longer term, this is a good, we're certainly making higher highs and higher lows now. So the trend is up. We started breaking 39 here with these support levels, then I'd be concerned. But, I think this one will fill this gap. Okay, what else we got here? AFRM, been talking about that one for a while. Had a big drop on Friday here. But again, this is a 2-year channel. I like this. It's kind of in the middle, still in the middle of this channel, but I think this can go higher. So I think this is just going to hold on to that one. Root had a big drop. That was surprising because their earnings came out and earnings were great. I looked at this. What was it? I think this was earnings came out the 6th, Wednesday. So before I went to bed, I looked at or after market, I was looking at it like 4:30 or whatever, and extended hours, and this thing was up to like 142 or something like that. So I was up like 20 points. So I went to bed thinking, hey, it's going to be a really good move, and then all of a sudden I wake up and I got stopped out. So that was frustrating because this is an interesting one. So if you look at this chart pattern, if you go back and look at my previous videos, I never really talked about this, but this upper trend line, this lower trend line, that's a rising wedge. I think I might have mentioned this once or twice in previous videos, but that is a bearish chart pattern. When you're making higher highs like this, but then all of a sudden your lows are catching up to your highs, you're just getting squeezed. They call this a rising wedge, and that's actually a bearish chart pattern. And what can happen there is the typical thing where you break down this lower trend line, and then all of a sudden it's like a cascading, waterfall down. And there's also the falling wedge pattern. So falling wedge is the opposite. Even though the stock's going down, it's kind of going in between two narrower lines, trend lines, and all of a sudden it takes off, and that's a buying opportunity. That's a very bullish chart pattern. So this one, I probably should have taken more than I did off the table when we were in this area, because I was concerned about that rising wedge, but I still held on to it. And then we started getting this consolidation. So we basically broke the wedge, this lower trend line, which was well defined here, this white line. And then we came back up, and we retested it right here. But then we came down, and I held because I thought this looked good as far as going into earnings. This looked like a consolidation. I thought at minimum we could at least go back up and test this trend line. But man, this thing dropped like 30 points. Really incredible drop. Now, if you look at my green lines here, these are the support levels. We broke the 102.01 from April 7th. So that was bad. And then we broke the 91.99 low from February 24th. So that was bad. So we're below the 300-day moving average. So this doesn't look good. But the only thing I will say is if you draw, I had this on here, but it didn't get saved. But if you draw like a similar trend line to this top one again, if you try to replicate that and you hit the lows here. So let me just do this now, and I'll show you how I do this. Like if I'm drawing, and I'm saying, okay, that's my low right there. And I say, I'll have to measure this angle here and get it perfect. But just for now, if I say, okay, that's possibly my channel, then we're just about there, right? If this finds support, it's going to be right pretty close to where we are right now, where we closed yesterday. So that might be a buying opportunity. See that right there? If we start going any lower, then no, we're going to start entering this gap here. And that gap is, you don't want to be involved in that. But if we find support, this might be an area to buy next week if this thing can show you have reverse and then stay above this trend line. But I certainly wouldn't hold it below this trend line right around this area. And again, yeah, this works for me. These trend lines, people might say, hey, Frank, you're below all the key moving averages. Why in the world would you ever buy a stock like Root at this point? And the reason is these trend lines take priority over everything. If you go back and you look at the S&P, the trend line that I had there when we came down to the April 7th low, look how perfect this thing was. Now, this is a 5-year chart, but if you look at the hits here, we've got one here in 23, March of 23. If you extend that, it probably hit December of 22. You've got the November of October of 23. And then look at that. I mean, if you could gauge that and you say, okay, boom, if we hit that trend line, that's what I'm buying. I mean, look at that, 30% on the S&P. And if you had a triple leverage, ETF, you're doing 90%. So that's why these trend lines, these to me are great, because you can get your back up against the wall and you say, hey, I'm buying here. And if it doesn't work out and I break this trend line, boom, I'm out of my stop loss below that, whether it's a stock or an ETF or what have you. But if it does take off, it's a great entry. So it's low risk to me and high reward. So anyway, getting back to Root, I think, could be a good stock at this level. It certainly, it came down far enough, but and the earnings were great. It had good earnings. So that's the other thing. Like, how in the world does a stock drop like that when it had great earnings? And again, they do insurance. It's kind of like discount insurance. So I'm going to be really watching this one closely. I think it might be a good entry point here. But again, you got to keep your stop loss tight, because if this breaks this trend line somewhere around this area here where it's at, you don't want to be holding on to that, because then all of a sudden you're going to be coming down to the 60s or somewhere 50s like that. All right. Let's see, Oxy. We're still above, we had our stop loss in here, still above the stop loss. Earnings came out, so not a lot of movement. I was hoping to get a quicker swing out of this and get up to the 48 level, but if we do start moving, at least now we could get closer to 50, I think 49, $50, for the swing trade. And, we'll have to see how this plays out. We had this long downtrend, and, I like it because of the channel here that we're in right now. So we did break it, but we got it back above it, and, earnings kept it above it. So, I'm still into the Oxy. That's Occidental Petroleum, oil and natural gas. Let's see, Tesla, this one I bought around 310, 311. I got stopped out when the Trump, Elon Musk feud was taking place, but then I got back into it. And this is doing pretty good, 329. Earnings didn't really do too much. So, again, if this could get above this 373 area, then I think it could get up to 480. And then I did pick up URA. This is the uranium ETF. So I talked about this one last video, how I got stopped out here when we had to break down, but then this thing just took off. So I did buy some at the 50-day. I was waiting for that, hoping to get in at the 50. So I was buying here. We got a little bit of an upswing, but I'm gonna continue on uranium. I think this is a flag pattern, right? You've got the pole right here, and then a flag forming, or a pennant, and then it takes off. And then basically the textbook for that is that the next wave up would basically be the length of this pole. So that's huge, right? I mean, this is like 20 points here. So this thing could go up another $20, which to me is again, if that's where we get to, that would be a really really nice opportunity with this ETF or anything associated with uranium for that matter. And then Mara is still kind of, we had that nice move up in the 20s. This is a crypto play that I mentioned in the last video. With it, I've been talking about this one for months, but I think this is a head and shoulder inverse head and shoulder pattern here. You get left shoulder, right shoulder. This is your head. This is inverse. So this is a bullish pattern when you break out of it, which we've done. We're making higher highs and higher lows. So I think again, as long as we stay above this low of 1501, we're in good shape. Certainly this would be 1349 has to hold. That's huge. Otherwise you're in a downtrend again. But we came down yesterday. We need to get it back above the 50. So hoping that this thing can get back up in the, to me, this thing I think can get to this former high of 30. That's where I'd be selling it, but that's double where it is right now. All right, and then some of the other ones I'll mention, that I picked up here recently. Lemonade, I got lucky with. We had a good earnings report on that. So you see a nice jump here, but I think longer term, I wouldn't be buying this now, but I think longer term, this is a good stock. This has been making some. I've owned this in the past. That's why I mentioned it. I've had this a lot in the past, and we kind of had a huge dip here. This is the 10-year chart here. This thing is kind of big, long base, but then all of a sudden we broke out of the base. So now, to me, this is an uptrend. And if we start getting above, 53.85 former high here, now all of a sudden, we're gonna, I think, really start moving. So I like Lemonade. Zeta was another one I got into, another AI stock that had good earnings. We're in a channel now. We were in a downtrend. Now we're in an upward channel. Kind of, again, like Oxy and CellH and some of these other ones, we're making a channel here, and really, really good earnings. And so, I bought this before the earnings. This blue line is basically the trend line. This is another technique I use. If you, break a trend line, a downward trend line, that's an opportunity to start getting in. So I saw this. It came back down. I was buying it around 15, 14, I think, when we got back above it, and in this area. So, I did hold on to it through earnings. We had a nice jump there. So really good week on that one. That one's like Netflix. I did pick up some Netflix. It's basically looking to me, it's consolidating down here. So I did buy this. I think it was 2 weeks ago. Not making a lot there, but I think we could at least get to the former highs here. NVIDIA, I think that one longer term is obviously everybody knows about NVIDIA, but I did pick up a few shares on the downtrend. This was August 1st on that pullback there. Didn't quite make the 20-day moving average, but this is just showing really, really good strength here. Obviously, since the April lows. So any opportunity on pullbacks, I think longer term, this is a good one, especially if we could possibly get down to the 50-day. That would be a great opportunity. RIVN, that's a EV, manufacturer. This one is kind of on my radar just because of the electric vehicle stuff, and it's in this consolidating pattern. But I kind of see this as a coil here, which is another typical pattern where you're making a kind of like a spring action. And so with these, I like to look at where my lows are and put a stop loss just below that. So like you can see here, 1157 is the low from August 6th, and I think this might be a good one longer term if we can stay above that. You put it, closed at 1179, so you're just above that right now, and might be an opportunity if this thing can get turned around. And then let's see what else. Oscar Healthcare Company. This has been on the IBD reports. A lot of people talking about this one. I mean, again, this is just a consolidation pattern, but it's one that again, if it could stay above these former lows here, might have an opportunity to at least get back above here where it was back in June. So possible move on that one. Spotify is a good one. I did pick that one up, on the pullback to closer to 150. So I do like this one longer term. I think that's a strong, I mean, just incredible, move here as far as the stock. This is the 2-year chart. You can just see how this thing just keeps on moving. So, it did break the 50, looked at that as an opportunity, and we did stay above the 150, so it's back above the 50 to 10 to 20, all of these moving averages, so I think that's a good one. And then a couple other ones that I got into. IONQ is another AI stock. We're doing some consolidation here, so I do like that. Was buying this the last 2 weeks. And then Qualcomm, I like that one as well. It's one that I've owned in the past. We had to drop on earnings here, and so I picked some up this past week. I think this longer term is a good stock, especially if it can continue to make higher highs like it's doing here and higher lows. And then one for chokes here. This is Upstart. This thing is really moving, but I like it here because it hit the 50. So this thing got up in the 80s, 87, 80 was the high here recently, and then came down and touched the 50 days. So I do like this at the 50. Just was buying this here this week. So I think we have a good channel here. I didn't draw the channel lines yet, but I think this one can certainly get back up to the former highs here. And it's in a relatively good pattern now. It's making higher highs and higher lows. As long as it stays above the 50, I think you can put a really tight stop loss on this one. Below Wednesday's low, which was 66.60, and it closed at 68.76. So I think that's a good one for. You can see the stochastic is oversold right here. So I think that's a good entry at this point. And then some of the ones that again, if you're talking about stocks that have really taken a huge hit, which there are a lot in the healthcare sector right now. This is United Healthcare. I mean, if you look at this thing, it's just basically gotten hammered. This is they call it dreaded H pattern here. So you got the little H. Here's the left side of that, and then we form this little curve, and it's broken the left side H pattern, which is typically not a good sign. But the reason I mention this one is if you look at the longer term of United Healthcare, it's just independent of how you feel about the healthcare stocks. Let me get rid of the earnings things here, but you can just see this thing. This is a max chart here. I have going back to like when it opened up around 85 or so, and you could just see, I mean, how this thing has moved. It's just been incredible. And so, to me, it's again, if you go back and you draw a channel, you get rid of this thing here. You can see we got really good points on this long-term channel, right? So this goes all the way back to 1998. Look at that. And then right here, we've got a couple of hits. Now, this is a monthly chart, but this is the financial crisis right here. 2008, 2009, we came down, we hit that. And if we were to get close to that again, around the 300-day moving average, so that would be like, we start dropping into the 160s or, even closer here to this bottom trend line, I'd be a buyer of that. Even though, again, we would be below all of these key moving averages, which is like a fundamental rule. I typically wouldn't be buying a stock. But if you look at how this thing has dropped like 63% since its high, it was around 630. Yeah, 630 on November 29th. And now it's at like 250, and it went down to 234. So that's already down over 60%. And if that thing goes a little bit lower with this dreaded H pattern being broken, I'd definitely be a buyer of that, because longer term, this trend is a multi-decade trend. And you could basically put your stop loss, below that. But I just think United Healthcare is just too big to fail, and I just think that it's there's been a lot of stuff in the news lately, and people are getting out of it. But you could just see this trend here. It's been really longer term. It's stayed above the 50-period moving average here for many decades. So when you start getting down here and you look at the stochastic, look at that stochastic there, how low that is. That's like 6.99. I mean, that is so oversold right now in the monthly chart. And then you look at last time it did that was the financial crisis. Okay. So we all know the financial crisis at the bottom. That was a time to be buying. And, we had a couple other hits here. But below the 20 on this low stochastic, last time we were even before that, the financial crisis was like this period right here, right? Like 86, 87. So if you were buying in November of 1987, this is a good trivia question, but if you were buying United Healthcare, let's say $500, you got $500 laying around, you put in United Healthcare in 1987, year after I graduated from high school, in November of that year, and you sold it near the peak of 630 in November of last year, that $500 would be worth just under $4 million. I mean, that's why, for the young people out there, my nephews and nieces, you got to look at the long term. Everybody wants, quick overnight gains, but you look at the period, if you're just starting out in your career, and UNH, I mean, there's plenty of stocks that have done this. It's not like this is anything special, but over the decades, like a Coca-Cola or a McDonald's or a Home Depot or any of this stuff, like you see it out there and you say, oh yeah, it's drawing customers, and you invest in that over a couple of decades, you're going to see gains like this. I mean, $500 in a couple of decades, right? 40 years to 4 million. That's just it's crazy. But that's what the stock market can do for you and create generational wealth like that. So that's why it's so important to invest when you're young and early and as often as you can, because this stuff you can't replicate anywhere else in any other type of investment, real estate or anything. I mean, this is just, So anyway, UNH, I like this one. If it gets down a little bit lower, it's a terrible chart, horrible chart. Everything's wrong with it right now. It's so broken. But when I look at this stuff here, I start seeing a little bit of divergence. Right. So this is the 2-year chart. Let me do the 1 year. And this is where you have lower lows forming and then a stochastic. And you could do this with many different technical indicators, the MACD, which is the moving average convergence divergence. Not to get confused with move add changes, deletions, the AT&T folks who might be listening. But MACD in terms of the technicals, if you see that or the relative strength index, RSI, or the stochastic where you're making lower lows like we're doing here with UNH, but this is actually trending up. It's actually like 21 right now. It's above 20. That's actually showing that the momentum is changing. So the momentum is changing in terms of the sell-off and the volume, and that's what's measured in all these different tech, and they're all showing that with this. So they call that positive divergence. When it's going the other way, when you're going higher and this is going lower, that's negative divergence. But when you've got something like this, that's called positive divergence, and that basically says, hey, there's a trend change that's coming, right? You don't know when, you don't know how much lower this thing can go. But at some point, when you start making higher highs like this with a stochastic or a MACD or an RSI, you're going to see a trend change. So I'm keeping my eye on this one. But that's again just a good lesson in terms of a stock that's doing horrible. And when I look at something like this and I start drawing trend lines, I say, hey, this is something I'm definitely interested in. Even though it's breaking all these moving averages, I think this has potential to really, bounce off of these, these lows here. So keep an eye on that one. And I think that's pretty much what I wanted to cover. That's where we are. I mean, it's just basically sit tight for most of the stuff, which is really hard to do sometimes. Just because you're making these huge gains, and it's just like when you're up 30% on the S&P, you figure, yeah, I better start selling stuff. And I think that is good with a lot of stuff, especially things that have been parabolic. I'm happy I sold some of the AMD. Same thing with Palantir. I had sold that and then picked it back up in the 130s. Kept a core position, but sold some of it, so I have some dry powder and was able to do that with AMD as well. And same thing with Root. I think Root, like I said, if that thing can stabilize where it's at, it could be a good gainer. But certainly we had a great week with a lot of these earnings, with Lemonade and Zeta and Cell H. I mean, just some really, really good moves. Palantir, Apple's moving good. Amazon again. So just terrific week. But again, you have to let the market dictate how this thing is going to look longer term. And, this is the only concerning thing I have right here, right now, is that we're hugging this upper trend line. And, yeah, it's possible we can get above that and form a new channel, which is always possible. But, if we start seeing more and more distribution here, I'll probably take some more positions off just because, we could, get back to the 50, and you want to, if we do that, have some cash available to invest in, in some of the stocks that could get hit, substantially, in a move like that. So it's always good to have a little bit of cash on hand. Okay, so that's the update. Hope everybody's doing well. It's a beautiful day out there today, so I'm going to enjoy the weather and get some yard work done. But I wanted to give this update since it's been a couple of weeks. And again, to me, you basically sell on the rip or buy, sell on the rips and buy on the dips. In a situation like this, we're in a clear uptrend with the market. So you buy leading stocks, true market leaders in the top sectors, which is what I try to do. I have a subscription Investors Business Daily. I look at that every day and basically monitor what's going on with the leading stocks and, respond accordingly based on what the indexes are doing. And the indexes are always what I kind of look at, because even if you have a great stock, if the indexes start selling off, that stock's going to eventually start going down as well. So the indexes are key, the S&P and the NASDAQ. I don't worry about the Dow Jones anymore too much because it's only 30 stocks. But, the S&P and the NASDAQ, I look at those every morning. It's the first thing I do when I see what's happening. So really important. And, again, when you start getting up to these levels, yeah, I'm hoping we continue to hug this upper trend line, maybe have a little bit of pullbacks to give you some entries, maybe with some other stocks. But I think you basically ride this thing as long as you can until there's something, because this can go on for a while. I mean, this could go on. Like I said, we're in the beginning stages here. So this thing could continue to ride this upper quadrant here for many, many weeks or months yet. So we'll have to see and respond and assess, if we start selling off here. But, right now things look really healthy. Okay, that's the update. It was long. I'm going to put these on YouTube just because, this is small circle of family and friends, but it becomes too burdensome to try to send these things out anymore via text and Signal. So it's easier just to put them on YouTube, and that way I can put everything in one file and upload it. Okay, hope everybody has a good weekend. Take care.